We saw people lining up buying gold in Singapore, trying to just get in last minute.
That's always the joke, right? When your Uber driver starts to talk to you about your portfolio you got to sell. Jane Street is on the verge of a blow up. They're short gold, long Bitcoin, leveraged to the moon.
We were not expecting this to halt multiple times down.
When gold tops out, liquidity flows into Bitcoin and crypto. That's when bull runs begin. Don't get shaken out by short-term manipulations. Welcome to episode 4 of the Trading Floor podcast. I'm Garret Drinan. I'm here with my partner, Tim, aka the Colorado Whale. And we've got Kurt, as always, in the background controlling things. So it's October 23rd, Thursday. So about a week ago on Friday, we had a really great gold trade. And Tim, I want to talk about this trade today because this was a mean reversion trade, a parabolic short that we often take on the desk. And for me, it was super interesting because for a lot of reasons, it was the same old trade playbook that we always take. And for a lot of reasons, it was dramatically different, right? Because it's gold. We don't usually trade gold, right? This was a case where gold had gone on a massive run, blew through 4K, went parabolic, and set up a nice short on a Friday. So just some backdrop, Tim, gold's the first asset class to hit 30 trillion in market cap, and it's had its best year since 1979. So gold's been in play, right? And when things are in play, we trade them. So where do you want to start? Because I know there are a lot of places that we could touch on in this trade. There are kind of stories within this trade. Where do you want to start?
I think we got to start with all of the headlines that I was seeing. I've never seen gold talked about more than I did last week. And this was our first time trading a mean reversion in gold, and rightfully so. It took over Twitter. But I thought what the most interesting aspect was just the mania that came with this gold breakout. We saw people lining up buying gold in Singapore and Australia, trying to, just get in last minute as gold was never going to go down. It was pretty crazy.
Yeah, I mean, and that's one of the big factors, right, on a mean reversion play like this. And the things that we would compare this to are, some of the bigger plays in this playbook. Like over the last few years, we had SMCI blow off last year. We had MSTR blow off last year. And we even had Beyond Meat this week, right? Where something just gets out of hand, right? It can be at the end of a trend. It can be something like Beyond that just went nuts for 3 days. But generally, we're looking for something that speeds up, right? And gets unsustainable. And you're looking for that really quick unwind that'll often happen intraday that gives us a fantastic risk reward and great context for this short. And like you said, it just so happened in gold. And around the time of these trades, one thing I've noticed is that if you think about it, it's max euphoria in whatever asset class we're trading. And gold was no exception because, like you said, we had all kinds of news surrounding this, people lining up to buy gold bars,
Physical gold.
physical gold around the world, who are just hearing that you have to own gold. And I mean, they may be right. I'm not saying they're wrong, because this was just a 1-day pullback that we traded, or even a multi-day pullback. We're not saying that gold's done, but you start to hear these kind of news stories around that short-term top that we're looking for.
And I think it's interesting whenever something gets so mainstream, what it reminds me of was back in 2018 with Bitcoin when it topped. So I was in college then, and I remember everyone started talking about Bitcoin. I had buddies that now were starting in on Bitcoin and thinking, we're traders now. And when you start getting it to be mainstream, Uber drivers talking about it, your parents are talking about it, that's when you start to get that max euphoria. And that's what started getting us really interested in that short.
Yeah, that's always the joke, right? When your Uber driver starts to talk to you about your portfolio you got to sell, or if your grandmother calls you and says hey, did you hear about gold?
Exactly.
And so some of the pieces around this, these are we kind of collected some news pieces that came out this day. First of all, massive price target increases by Bank of America. I mean, they raised it to 5,000. JP Morgan, Jamie Dimon says 10,000 is possible. And again, they might be right. We're not saying they're wrong. It's just it just so happens that this kind of stuff often comes out during that max euphoria stage where it's about to unwind. And the main thing for us is the chart, right? Like we'll show this chart. That's the thing that gets our attention, that sets up the trade. And then of course, then you're kind of looking for these other signs of max hysteria, max euphoria. And, it was really interesting. Like we had people buying up, lining up to buy physical gold. Yahoo Finance basically put out a big article showing images of these people in line, like throughout the world, like different countries. For some reason, this was just catching on
Hundreds of
in every
people.
hundreds of people. And everyone loves to talk about Bitcoin with this. Like the headline for Yahoo was people are lining up to buy gold. Is Bitcoin losing retail demand?
Yeah. What does that make you think? Because that has always been a comparison with people buying Bitcoin and selling their gold, or people selling their Bitcoin and buying gold.
Yeah. So two things. Like one, Bitcoin's never really acted like gold, right? If you're just like watching the action, watching the correlations, like I know that it's supposed to be like a digital gold, and that's an argument from a lot of people, including Michael Saylor, right, who tout Bitcoin. I've always seen it as a risk asset, right? It's a technology that has a lot of people on the long side, a lot of people on the short side. Maybe it hasn't fully been proven, so it's still very speculative. So it tends to trade higher when there's risk appetite in the market, right? And that's not really the same thing as gold, which it acts very much like a store of value. And so I see them as different. Maybe someday Bitcoin will actually like take on that role, right? When it becomes less volatile, more stable. But right now, it feels more like a speculative asset. So I tend to not compare the two. What do you think?
It's funny, just to even throw this, we saw another tweet from Bill Gross that said gold has become a momentum and meme asset. Just to add to that point, uh, they started saying, last week that it was a momentum asset now. But I agree. If you look back at the historical chart of Bitcoin, I wouldn't say it's acted similar to gold. I don't think there's a one-to-one correlation between, holding gold and holding Bitcoin.
All right. And a lot of people, a lot of the, and we'll talk about this, at the end, I think, but a lot of the Bitcoin people out there love to say when gold tops out, Bitcoin takes over, right?
Saw a
That's a
lot
thing
of
you just see
tweets.
all over the internet. We have yet to see that happen this time. And another article, Financial Review. Yeah, people are queuing in the streets to buy gold. Should you? It's hard to ignore FOMO when Australians are lining up to buy physical gold and silver. But with prices surging, is it too late to get in? And what does this retail frenzy tell us about the next market move? So, I mean, these articles are just creating FOMO, I
Literally.
think.
And
And
that kind of sounds more sane than some of the ones we've seen.
that's true. And we're getting retailers suspending sales. So, a tweet by the Gold Telegraph. Japan's largest gold retailer suspended sales of small bullion bars for at least a month. And again, like this is all coming out within 24 hours of our trade. So that's like, they're just done selling, right? It's either no more supply or what, right?
And when I was looking at all of these articles and tweets, what I was kind of thinking is like, this just adds to the euphoria and it gets us excited for the short. By no means is that like a signal for the short, but how would you say you took any of these as
I mean,
information?
I find it interesting because you just seem to see this kind of stuff around these moments. Like when these trades are setting up technically, you tend to see price target increases, you tend to see shorts throwing in the towel, and then you tend to see these like euphoric headlines, right? Because it hits the mainstream. It's like the thing that's performed the best. It starts to go parabolic. Everyone looks at the price and says, "Well, what's going on here?" Right? Like there must be something that I got to know. So all of a sudden it makes headlines, right? Um and we've got like there was even a story about Jane Street blowing up,
Oh yeah, I saw
right?
that, which I don't know if that's legit or not, but that's a big firm, like a massive firm, which that would be shocking. But they were
Yeah, I
short
mean,
gold, right? That's what it was. They had like a big short position in gold.
Yeah, they were
Yeah.
apparently they were short gold, long Bitcoin, and leveraged, and so I mean, the rumor was that Jane Street is on the verge of a blow up. They're short gold, long Bitcoin, leveraged to the moon. Bitcoin pukes under 100K and gold rallies above 5K. They're liquidated by close, right? So that's just that argument. I don't know how true that is, but again, like these are the kind of funny things that'll come out around the top where it's like, oh, someone's blowing out. Like that's an explanation for this parabolic end of the move, right? So let's actually show this chart, just so that we can look at this parabolic move because this is really our trade. So Kurt, if you could please bring up image number 6. This is a daily chart of GLD, so that's the ETF for gold. Going back over a year, and this goes up until the day of the trade. So this is the way the chart looks like when we're setting up this trade. So this would be Thursday. We took the short on Friday after a gap up in the futures and a kind of rollover in the morning in the pre-market into the regular trading hours open, which we'll show. But I really want to point out that like when we playbook this play, when we find this repeatable pattern, and the reason why it didn't kind of matter if it was gold or popcorn, it really doesn't matter. But when something has a
Popcorn.
big run, like yeah, we're trading popcorn futures now. When something has a big run like this and then starts to speed up, right? The rate of ascent increases and you get like 1, 2, 3 gaps in a row. And you can measure this. You can look at ATRs above a moving average. You can use Bollinger Bands, or you can just look at the chart and see clearly that this is accelerating, and it's accelerating to a point that often becomes unsustainable. And so we like to look for these snapback mean reversion plays when a chart starts to get like this. And so the point that we're making, right, Tim, is that when charts get like this, you often see a lot of positive news stories around whatever asset class this is.
The craziness ensues. But wait, Garrett, with this chart, what are the moving averages that we're looking at here?
That's a 50 and a 200 day,
So
I believe.
the 50's at around like 360.
Yeah.
That's
Yeah.
crazy. I mean, it's 36 points above.
Yeah, exactly.
And then you get that
It's
acceleration, like you said, in the gaps. And like gold isn't one that I don't think I've seen it accelerate even close to this kind of fashion.
right. Yeah. And, I mean, the reason this is such a different trade than we're used to making is, in my opinion, that a lot of times when we see stocks do this, it's also coupled with some sort of overvaluation, or you know it's gotten way ahead of itself. It belongs at lower prices, right? The fundamental people step in and say it shouldn't be up here. Like we were talking about RGTI last week, and even SMCI gets out of hand during its run last year, and you can make a strong argument that this could be the top for a while, where gold was a little bit different because you've got a major asset class that has a huge story behind it and a huge driver for why this run has been happening. And that story hasn't changed. So it's still going on. And for all we know, gold just pulls back, consolidates, and goes higher, right? Unless that narrative starts to shift.
Yes.
Did you look at that as like a different trade because of that factor, or do you just not care?
Oh, 100%. That's a major factor, I would say. And it's with the sustainability. Like we saw with the quantum, with Beyond, like they're at prices that we know aren't sustainable over the long term. So at some point, we're expecting them to get closer to their fair value. And it's more of like a short squeeze. And this wasn't, just a heavily shorted Beyond Meat. This had not even one driver, multiple drivers that caused this massive run in this breakout. So I do, yeah, definitely look at it as separate and different. And that also is why, like, with this short, if it doesn't work, you don't want to press it too hard because it's not one where you have that conviction that it should be lower. We just know this is a setup in our playbook. It has gone parabolic, technically speaking, and we have that trade.
Yeah, and you can still get a very good technical snapback in something like this, especially during a max euphoria moment, right? Which is the key for us. And I think the other thing that was going through my mind was that often with these Beyond Meat and SMCI and even MSTR, you don't sometimes with these equities you expect like a limit down moment, right, where it just totally unwinds, right? Like everyone who's been riding the train gets off, like fear starts to increase in the longs, and the shorts all got blown out, and there's this moment of complete unwind. And sometimes it'll happen on like a Thursday or Friday where all the options are expiring, so you even have the dealers who are doing their thing, like unwinding their hedges, and the whole thing just goes down in a straight line,
Yeah.
sometimes even limit down, limit down, limit down, right? Like Beyond Meat, like I think SMCI went limit down. So this is not something I was expecting with gold.
We weren't
It's a
expecting to hit
huge,
the limit down that Friday.
yeah, I
We
mean,
weren't waiting.
you never know, but I think in terms of like when we're trading something, we always like to think about like how is it going to trade or how is it trading, and then like how might we expect it to trade, right? Because wouldn't you say that kind of informs us in terms of like how we're going to trade it and approach the name?
I would say that's one of the bigger things I've been focusing on this year is the nature of the stock. Because all stocks, even if you're like trading tech stocks within the same sector, there usually is a nature to how they trade. Some kind of backfill, they retest breakout levels. Some, are like Tesla, where sometimes they're off to the races if they have the volume and they get above their breakout level. And with gold coming into the day, yeah, we were not expecting this to halt multiple times down. We thought it could potentially be a little more grindy price action. And yeah, that was kind of what we were focusing on. But with that, still a pattern. We were still looking for very similar setups. I would say the other area that came into play with that is how we targeted our like profit taking, where our targets were at.
Yeah, I mean, the targets might be a little bit closer. I know with something like an equity, sometimes you're expecting it to just completely engulf like the last day or two.
And
Um,
the best ones usually do engulf the prior 2 days of that parabolic.
right, right. Yeah, and I mean, like the different ways that a stock can trade can really inform us whether we can be like hitting lows in something or whether we have to start to try to short the pops. And like I know for me, like we talked about RZTI last week, and I mean that one was particularly tricky for me because it didn't unwind in an aggressive way, and partly because it didn't have that parabolic move. So it was a little bit more of an orderly stair step kind of unwind that occurred over multiple days. And so even if we're catching it on the day where it cracks, we weren't really getting that panic, that kind of panic selling that you get when you can really just hit lows and it flushes and just keeps going. Like I remember I would work into a short position around some turn, right? So up at resistance, okay, it can't get through. This looks like it's where the turn's going to be. This consolidation's probably going to roll over because it looks like this is backside, right? It still looks like a short. I'd work into a position and it would be a great position of strength. It would roll all the way back to the lows, and then it would consolidate and break lows, and I would just hit it hard. I would add a
I
bunch
was doing
there,
the
and then
same.
it would and then it would just rebid and then just rip in your face and then kind of make another lower high and then kind of roll over again. And so after a while, recognizing that kind of price action, being like, okay, this is how RTTI in this case is trading. I need to adjust how I'm approaching this stock. And so it was good to kind of think about the fact that we're trading gold going into the trade, to think about, okay, like how might this trade? Like how does gold usually trade? Like we watch it enough, like we've traded it before. We're not specialized gold traders, but you can kind of see the ebbs and flows and how it moves. And even the last time it came off, didn't someone put like an analog in our chat where we were kind of looking at the few other times that gold came off?
Curtis did, yeah. From the
Yeah.
pullback, the pretty much the only major pullback that we had on this big run, which was, I believe, it was 10-9.
Yeah. What do you think? Like this is a huge move, and it's really hard to talk about really setting this short up without understanding like how we got here, right? Because we're talking about the drivers of gold and the story not changing, right? So what is that?
Yeah,
Let's kind of let's rewind a little bit and talk about this breakout on this chart and how this move started and why gold moves the way it does, because I think that like there's so much misunderstanding out there about like what gold is and why the price changes.
100%.
Like I can't tell you how many times I've heard gold is just worth what people want to pay for it,
For
right?
jewelry,
Like
yeah.
as if it's like an imaginary thing that's just based on fear. And I mean, first of all, I think anything's worth just what people are willing to pay for it, right? Isn't that's like the definition of a market? Um,
Yeah.
but let's rewind and go to some of these drivers, and I want to throw up um, the Jackson Hole chart. And this is going to be the beginning of this consolidation. And let's just talk about this breakout as we talk about the drivers of this trade. So, Tim, what do you see as like the major catalysts and fundamental drivers for gold on this particular run?
Yeah, we'll get to the short later, as fun as it is. But it really started at Jackson Hole, where we had Powell pivoting, where he was going to focus less on inflation. And the big takeaway was we have the path to rate cuts. We're going to cut rates. And on that Jackson Hole announcement, gold ripped. GLD absolutely ripped. And it feels like forever ago, but we took that trade. We didn't get in on the initial reaction, but once it held higher, that's when we started getting into our gold swing.
Right.
And
So that's the catalyst that broke it out. It was the Fed pivot, right? So
yeah,
we're gonna lower rates. We're gonna be cutting rates, and that's a big deal for gold. Why? Because gold likes lower rates,
gold
of
loves
course.
lower rates. And gold doesn't pay dividends, it doesn't have anything. So when rates are lower, there's more of an incentive to buy gold rather than putting your money into savings or bonds.
Right. So it's like relative to everything else that does have a yield. When rates are low and those yields go away, the value of gold goes up, and that makes perfect sense, right? Um, what's another driver of gold?
Yeah, so we had a ton of central banks buying throughout this year. Like the inflows gold has had over the last 10 weeks, I saw it was 34.2 billion. Yeah, look at this, Garrett. Look how insane that is, especially even towards the end where you did get kind of like what we would look at if it's a chart is almost a blow off at the end in terms of the inflows, but it's
Wait,
been
so what
steady.
are we looking at here? This goes back to 2017,
Yes.
and we're looking at the gold and silver inflows, a 4-week moving average of the inflows. So this is all the money flowing into the gold market
Yes.
throughout the last like 20 years.
And it's on the y axis, that's just in billions for each of the weeks. And
Yeah,
overall,
okay.
it added up to 34 billion, which is insane. That's a lot.
Okay, so these are the biggest inflows that we've ever seen.
Yes.
And like to your point, like you think that's mostly the central banks around the world buying gold,
Yes.
because that has been what's happening. So like a few articles that came out during the day of the trade. So India's gold reserves have crossed the 100 billion mark for the first time. Um, and then, you've got all these emerging markets. So clearly, like Russia, China, India, those are huge.
Yes.
But you even have like Poland, Kazakhstan, Turkey, China, Czech Republic. They're still buying gold. So like, it's interesting that this is a worldwide thing, and it's not just institutional flows. It's not just traders, but it's central banks,
Yes.
right? Who are trying to do anything they can do to not rely on the dollar, right? Because if you look back to the Russian invasion, um, and kind of the stuff like the stance that the U.S. took, and of course, dollar being like the world currency, dominantly, U.S. is trying to weaponize the dollar. So if you can kind of get off that the best you can, you're going to, and that's kind of like what we're seeing across the world right now. Um, Steve Hank on Twitter said global central banks are now sitting on more gold than at any time in the last decade. So
Yeah, wow.
clearly a big driver, and we're not seeing like a slowdown in that at all. So that's still there. We're still in a rate cutting cycle. The other big driver of gold is inflation, right? Because really gold likes low real rates, and real rates are basically the rates minus inflation, right? Adjusted for inflation. So high inflation, low rates, good for gold. So if inflation's not coming down as fast as the rates are, then that's going to be a driver for gold. And then on top of that, you've got central banks buying all over the world. And so, Tim, to the point of, no, you go ahead.
I was about to say I got excited because it's crazy. It's not even just that. Like gold also is just a safe haven asset. And we had the geopolitical tensions with the tariffs this year, which is another driver.
Right. Yeah. You have a million things. And so, like to me, when people are like, I don't know what gold is. Like, it's just this random thing that um, is basically worth what people are willing to pay, and it's just based on fear. It's like there are real drivers for it. And the way that I like to look at it is gold is just this rock that doesn't change, and like everything else in the world is changing around it, and therefore like based on how these things are changing around it, like interest rates, inflation, the dollar, all the other currencies, the value of this rock that doesn't change will change because everything is relative to everything else. Like, so a good example of that is currencies. So you've got the dollar, but when we talk about the dollar, it's always priced in, another basket of currencies like the euro, for instance, right? You
Yeah.
can look at the dollar euro pair. So the dollar strengthens against the euro, that's the dollar going up. But what if the dollar is just sitting there going sideways, not going higher, not going lower, but and again, relative to the euro, relative to all the other currencies, we're not really seeing any movement in the currencies. But what if all of the currencies are being devalued at the same time?
Yeah.
Well,
That's
then,
very interesting.
how do you express that? Well, then gold is going to increase in value. So that's like how I like to think about gold. Um,
It's a good
but real
analogy.
quick, yeah, real quick. So why have the central banks been buying? So Walter Bloomberg on Twitter says gold erodes dollars reserve dominance. Gold now accounts for about 30% of global central bank reserves, up from 24% in June. Boosted by price gains and diversification away from the dollar, US dollar reserves have slipped to 43% from 60% in the early 2000s, pressured by policy. So that's what we're saying is like the world is trying to get off the dollar a little bit, and that's been a big driver. The Gold Telegraph says in an article that they recently put out, nations have been pushed to seek alternatives when money becomes a mechanism of control rather than trust. Countries look for neutral stores of value and settlement systems. Gold plays a powerful role. So none of this is changing based on our little short trade off the high.
Yeah. None of that is debunked or invalidated in any way.
Right. So back to Jackson Hole, we get the Fed pivot. That sends gold. That's a great catalyst for gold. It sends it to the top of the range. It breaks out. We make that breakout trade, and of course we sell way too early.
We
Um,
tried not to, but it was,
we
I
tried.
mean, you can't not sell early with something like that move. It's so hard.
Yeah, yeah, absolutely. So then we get this beautiful trend off this great narrative that we're talking about, and it starts to blow off. And so not until it gets parabolic at the end of that move are we really starting to talk about, hey, gold could be a good short, at least for an intraday trade, maybe for a swing, maybe for a good pullback, because it's such a great technical signal. I wouldn't want to short gold when it's just grinding higher. I wouldn't want to short maybe anything when it's just grinding higher. And that's kind of one of our rules, right? If we're trying to mean revert, if we're trying to short something that, as they say, is up too much, um, we really want to see that acceleration to give us the signal that something is unsustainable. And, like we talked about RGTI last week, that's a little bit different because those were very overvalued and they were up a lot, and it never really gave us that parabolic move, which to me would have been a much better setup for that short. But with something like gold, even though it still has these fundamental drivers, if it starts to go parabolic like that, at the end, we still like the trade. And so let's talk about this short.
Yeah,
Um,
let's get to the short. But in general, with the front side, you're completely right. You never want to step in front of the front side. And with something like gold, with the fundamental thesis that we said, it kind of helped us to avoid the front side. Like that wasn't even something we were looking at all up until last week.
right, and you start to get those few gaps in a row that goes straight up, and that really gets your attention, and it blows through 4K, and that's probably a big target for a lot of people, and it started to look a lot better.
Yeah, 100%.
This is the 2-day picture leading into our trade. So the first day there, and then we get the after hours and the pre-market into the Friday that we took the trade. And what do you see here, Tim?
First, I think it's interesting into the trade, we started seeing some pullbacks in gold that just reclaimed very hard and it closes at highs. Like I remember us watching that close and just almost jaw dropped, seeing how strong that close in gold was the prior day. Then it gaps up, unable to follow through the next day in pre market and pulls into the open. And that's kind of, we are already looking for the short, but that's how it was set up. So originally, yeah, that's what I kind of saw. Super acceleration on the prior day. You get your gap up, so another gap up, and this is potentially ready for the short.
Yeah, it's that after hours action. Like you said, we close at dead highs, squeeze into the close the previous day, and then you just get that blow off like right away. I mean, I was still on the desk at this time, like watching that, and like I just remember being like, man, like this is if this isn't the trade tomorrow, then I don't know what is, because you get that kind of blow off action, that kind of parabolic. So now we're going parabolic on the daily, and we're seeing some parabolic moves on the intraday chart after hours. And then it couldn't get through that high, like you said, trades back down, consolidates, and then just kind of falls apart off the open.
You know what's
So I
interesting? Not to say gold is a momentum asset or anything, but it is interesting. You see, usually like a day or two before you get a backside, you get those short setups like it had in after hours in gold, where it like looks like it's backside. Like that sold off really hard, and then it reclaims and it's not able to continue to squeeze. Like, not to compare, but Beyond did something very similar in pre-market yesterday.
Yeah, no, I mean, you should be comparing,
Yeah, yeah.
right? Like
Good point.
this is what's so interesting about this trade, because it's gold. We expect it to act differently. It's gold. It has a narrative that hasn't changed. Like we don't know if this could go a lot higher. It's not an equity that's overvalued, and it's not beyond meat that might be a zero for
It
all we
was
know.
almost bankrupt until they eliminated debt.
Yeah, yeah, exactly. Yet we have the same technical setup, and it's
Yes.
doing the same kind of stuff that these names do when they blow off and set up for that mean reversion day. And that after hours move, like, I mean, we've seen that so many times, and then it kind of not being able to take that out in the pre-market and kind of rolling over into the close. I mean, that's very common, right?
100%. So coming into this day, how are you like game planning or planning for this potential trade?
So I'm already thinking, because we already saw the blow off in the after hours and it hasn't been able to get through that high. The first thing I'm thinking is like that's the hard stop. Not that I'm going to make a trade against that level because we're so far away.
Yes.
But I'm thinking like wherever this trades off the open, that's sort of the area where it should not get through. Otherwise, all bets are off for me until like I see something else, right? So that's the first thing, is you have your levels. And then I'm looking at that 395 level. So you see that wick down in the after hours and then that reclaim,
Yes.
and it kind of comes down to where it was consolidating the day before, and it retested that in the pre-market. So that 395 was actually a pretty big gamma level in the options market. A lot of options volume was there, a lot of options activity. And it was also a technical level here in the after hours and pre-market. And so I'm thinking, okay, we have the top of the range, and then we have the bottom of the range at 395, and if we can break that 395, especially off the open, then maybe it's not going to be able to reclaim, like maybe that starts the whole unwind. And so I started getting in some in the pre-market there, like right before the open. You're kind of seeing it hold below um, the level where it broke down from, and it's consolidating. And I was just thinking, if this rebids and trades higher off the open, I'll just get right out. If it flushes off the open, this kind of feels like the consolidation that's going to start the move. And so I wasn't really sized for that because it's like a pre-market trade and I'm getting a feel for it, but I did feel like it was worth kind of getting in a little bit just to see if that would happen.
Garrett, we're always on the same page. I was literally about to ask you, how do you size something like that in the pre-market? I
Yeah.
was about
Yeah.
to ask.
Yeah, I mean, at this point, like, I don't have a great feel for it yet because the market hasn't opened. Haven't been trading it. It's early, right? I don't want to just blow out on like my first entry in the pre-market. And I'm certainly not going to just get in something like that and trade it all the way back to the top of the range.
Definitely.
So I was just noticing this orderly move off the highs, right? Where it flushes, holds lower cleanly, flushes again, and then holds lower cleanly. And I'm thinking, well, if this continues, that's going to take it through that 395 level, which I think is significant. And that should start the breakdown in gold. And we know how these backside days work. Like once it goes, it's not going to reclaim that level. So I
Yes.
just got in, you know, I would say like a tenth of the kind of size that I eventually got in, like during regular trading hours, just to see if it could flush and I could start the trade. And so, when it flushes down, I'm covering a little bit and then kind of keeping some and then looking for the real trade. So, actually, Kurt, if you could put image number 7 up, please, we can zoom into the intraday.
Because, yeah, I didn't have any position overnight. If you were a futures trader, you could even maybe traded that lower high at 402. But for me, I was looking for an intraday pattern after the market open. And I was stalking that same area, that 395 area.
All right. And so that second box is kind of where it consolidated around that 395, right?
Yes.
So what were you thinking at the open? And did you even have a plan for like how you might execute this, or are you thinking more open-minded in terms of I'll just see what the price action looks like and see if any of my um, patterns or spider sense kind of hits me in the face?
Yeah, this is where it's fun because like our team, we were kind of expressing it in different ways. And I know me and you traded this differently. But I was really looking for the multi-day continuation, looking for the swing trade on this backside using an intraday entry. But I was looking to swing it. The 20-day was around 370 at that point. I don't want to jump back and forth too much, but there's some interesting historical stats, which we could show in a little bit that kind of helped my view. Just to show real quick, only 4 times has gold been up more than 9 weeks in a row. You look back, some fun years I traded all those way back years. I'm just kidding. I didn't trade them. But 4 instances, so very small sample size. But what I'm looking at there are those averages at the bottom. So after 9 weeks up in gold, on average, 2 days after it was down negative 6.5%. And then if you jump over to the right, a month later, it was down 11%. So I already knew there's a lot of meat on the bone here. And this is parabolic that I thought, yeah, this could move into 370 into the 20-day for sure. And I think these are a really good area and great risk to reward for that trade. And we could get to how that played out, but that's what I was thinking.
So when you're thinking about that, obviously the path it takes to get there is important, and we can talk about how that played out.
Yeah.
But are you thinking, okay, I've got the stats, like I know this can unwind, and you're probably looking at the chart, just knowing what we know about this setup, and also thinking,
Yes.
like I know this can pull back much further just based on where the moving averages are. Are you thinking, okay, it's gold though, so what does that have to do with this trade? Like, were you factoring that in, the fact that this is an around the clock asset, futures market, um, global asset class, or did that not even matter?
I thought of it. To be honest, Garrett, like that's one of the main review points I have from this trade. So the way I traded it was I had the similar consolidation where we come up, retest VWAP, we hold below, and I played that breakdown. And I was risking 395. And I remember on the call saying, like, I don't think this should get back above 395. And the problem there is exactly what you're saying. Where like a lot of backsides, that's true. A lot of momentum stocks, that's true. But this is different. It trades again, yeah, overnight futures. And it was a little too tight of a stop, is what I came to find.
Yeah, and I will say that gold has come off more
I know.
since we've made this trade, and I think you were right about outlining that. And I also think that sometimes the trade just doesn't work. So, like, what we're referring to is gold came all the way back up and wicked the
Yeah.
highs the
Literally
next
just
day.
wicked it.
It's like it wicked through the all-time high and then just came off again and then totally broke down. So it
It
just made it very difficult.
I almost want to stop there too, because like that is something that is frustrating. But I almost want to make a point of like that does happen. It's not the first time it's happened in a trade. And I think what is important is taking your stop. Like there was a lot of big traders at the firm that, hit out in the similar spot where above the high was their stop. And sometimes, it's just unlucky. Like chalk it up as that.
Yeah, it happens to the best of us, that's for sure. And you're right. I mean, a lot of people got stopped out there, and sometimes that can be information too. When you kind of know, oh man, that was a stop run and it didn't go higher,
And it
right?
couldn't go higher. Yeah.
And then it starts to roll over again. Um, yeah. So
Yeah.
well, go ahead.
I was going to ask how you now looked at it because you traded it differently and more on the momentum side.
I did. Like, I didn't want to have anything to do with this damn thing after Friday night. Like I was just thinking, like, I just want to take advantage of this intraday move the best I can. It's Friday. We've got zero DTE options.
That was a big point.
Um,
Yeah.
and I was trading those along with stock, and I was also trading silver because silver was relatively weak and they tend to trade together. And that ended up being an even better trade. Like, I was more sized in gold because that was the main thing, but silver was a lot easier to trade. And that was kind of nice
That's
to
an
have like a
interesting
tag on.
point with the laggard. We've seen that before, but is that something you usually look to do with trading the laggards?
I just have it up on my screen.
And then you noticed it intraday. Yeah.
Yeah, so like I know because it's a gold day, gold's in play, that probably silver will be too. And silver had a great run too. I mean, silver was pretty parabolic as well.
And they had their
Um,
set
you
of
know,
tweets.
yeah, they did. And so and also silver tends to sometimes act like a leveraged gold, gold. It's just more volatile. It can really move. And I just noticed that off the open, we don't have a chart for silver here, but I noticed off the open that it was weaker. I noticed on the bounces it was weaker, especially that afternoon bounce where that third box is here on this chart.
Yes.
Um, silver couldn't even come back to VWAP. Like, it stayed really heavy and it got back down to the lows way before gold did. So with all of this information, I was like, well, you know what? Like, there's less risk of getting stopped out in this silver. It can't even rebid. Like, these pullbacks are really shallow. So I started to, on that bounce, get into some silver short SLV short stock and
Nice.
basically swung that down to the lows. And then there was a point where I got out of the stock because I was afraid it was going to bounce, and then I realized it didn't. So I bought zero DTE SLVs, and it had kind of like one more move, one more momentum move, and just got out of those. The reason I did that was because I wanted to get out of the stock because I didn't want to hold stock like all the way back up to my stop or all the way back up to the highs. But if I just bought a little bit of zero DTEs, at least I knew how much I was going to lose if this thing started to reverse on me, right? Because
Yes.
that's defined risk. You have a certain amount of premium, and if it were to completely unwind, there's a good chance that I would make the same amount. So I kind of converted my short stock into zero DTEs. when it broke the lows, and um, and I was just kind of trading them both at the same time. But pretty much, um, the major shorts I put on were where these boxes are here on the chart, and I was mostly trading the puts, and I did have some stock that I was trading as well. And the reason I do that is because I tend to be much more nimble with the stock. And so that kind of allows me to hit in and out if I need to and read the tape, where sometimes I'll use the puts to express a little bit of like a bigger picture idea where I know I'm not going to be quite as sensitive with those. I'm not going to be as nimble, and I'm really going to hold them as long as it's acting well. And especially with the zero DTEs, because sometimes, when they reverse on you, they just go to zero anyway. So
Quick.
you're not hitting out.
You have a quote, and I think this is maybe 2 years old. You can shake me out of my stock and never my calls or never my
Oh
puts.
man,
That
yeah,
was
that
maybe two
it's
years ago.
that's like, that's not even mine.
Oh,
That's
that's
not
not even
even my
yours? I thought
No,
that
I
was
mean,
you the
I
whole
say
time.
it, but that was the great Ricky,
Oh, that was
who
Ricky.
who I used to trade with, and he always used to say, "You can shake me out of my stock, but you can never shake me out of my calls."
It's such a
And
good
that's
quote.
that's how he would trade, right? He would, you can stop out of the stock, but at least with the calls, you know how much you're risking. So you can
Exactly.
sometimes use that to your advantage. Obviously, there are moments where we're going to buy a lot more premium than we're willing to risk, and we're going to manage that. And that could be a shorter dated option where we're being super sensitive to the price movements and we have a very close stop, or it could be a longer dated option that has so much premium on it just because of the time, and we're just looking at the deltas and we're trading it a lot more like stock, like we're gonna head out.
Definitely.
um
Here, Garrett, let me do a little magic trick for you. Kurt, could you pull up image number 2? Looks pretty similar. That was the analog that Curtis sent us on Friday.
Oh yeah. Okay, good.
Yeah.
I'm glad you put this in here. Kurt, who was on our team, put this in the chat saying, when gold was consolidating, saying, "Hey, this could make another leg. Like, look what happened last time. This is doing exactly the same thing." And we all use that information. I mean, it's really great to find these analysts. It doesn't mean it's gonna do the exact same thing, but it's just kind of showing how it usually trades. I thought that was really
And
helpful.
it shows you it has the potential, if it's shaping up in a similar way, for that second leg, which is very
Right.
interesting.
Yeah.
But I just
Yeah.
wanted to
And
show that real quick because I thought that helped, that day it helped the team seeing that.
yeah, it had that second leg, so
Yeah.
it worked. It worked. It worked out. Um, all right. So a point about Friday, since we're talking about options, um, like I said, anytime, and I said this last week, like anytime we come into a Friday, I love to remember that there are zero DTEs in anything that you want to trade, right? And I like I said, I really don't trade them all the time. I really need a special case to trade them. I kind of try not to trade them, but I always want to know that I can, right?
Yes.
Because like the last thing I want to do is buy some zero DTs and just sit in something that is like working in my favor, but just sort of grinding, right? Because that's not really going to do the trick, because you need the volatility to pay you, right? Because it's got to get there really fast. So, breaking news or explosive breakouts or explosive backside trades like this, where you can get, like, if we look on this gold chart, once it breaks lows, it's like bam, and it just gets there really fast.
Yes.
That's the kind of stuff that I would want when I'm buying zero DT calls or puts. And so on this particular Friday, TF Metals report, this is on Twitter, so at TF Metals, says this might be a good time to remind you that today is monthly NYSE option expiration day for the big miners, the mining share ETFs, the gold and the GLD and SLV ETFs. So
Are you just thinking that could lead to more options activity? Is that kind of how you're reading that?
the way that I look at this, and this is not a huge driver of the trade, but I just find it interesting because a lot of times these things just tend to unwind during like expirations, right?
Yeah.
And so this was obviously a big expiration, right, for these
Yes.
instruments. But in a way, every single Friday is somewhat of an expiration for whatever is expiring on that Friday, right? If they're weekly options, it might be a big monthly expiration, it might be quarterly, um, and yearly. But in this case, the fact that it's a Friday always makes me more interested in these trades because on these moves higher, when they go parabolic, we get a lot of call buying. And you get a lot of dealers who are hedging off their positions because they're selling the calls, so they need to buy the stock. And sometimes you get these gamma squeezes, and the IV gets juiced, the options premiums get juiced. But what happens on Friday is all of these options start to expire. So anything that's out of the money starts to go to zero. And when those options go to zero, the dealers who are hedging off these options have to unwind their hedges because these options are basically disintegrating. So they're selling their stock. So I think a lot of times thinking about, especially if a move is driven by options, that if you do get a move that starts in the other direction on like a Friday, a lot of that stuff is starting to come off the books, and you might get a faster than usual move in the other direction.
That's great to think of that dynamic because there usually is something that fuels it, and that would you put that great.
Yeah, and like SMCI was a great example that happened on a Friday. I think MSTR happened on a Thursday. We didn't get that for Beyond, that happened yesterday on a Wednesday,
Got
but
too crazy.
yeah, but still, I think it's something that's interesting to keep in mind. What I want to ask you about, Tim,
Yeah.
is that someone pointed out a really interesting dynamic regarding the London Open
Yes. Yeah. Yeah.
when
Yeah.
like and I didn't fully understand this, but you did, and so I want you to talk about this.
And I will preface this isn't really something I knew up until that Friday and that short trade. But there's a trader in our Miami office that was talking to one of our team members where at the close of the London exchange, basically what he said was, I think gold can trend after the London exchange closes. So I was like, oh, why is that? And why it is the London exchange is like the hub for physical gold. So there's a lot of physical and I'm trying to basically a lot of physical gold trading and spot trading going on during that market hours. And then when it closes, it switches to then just the futures and hedge funds in institutional buying, where you kind of get your fund driven trends potentially. Where on a day like Friday, we're looking for the backside, it was messy in the morning and it just so happened right after the London close, it really cleaned up. So in that, we got that quick note from Josh in Miami, did a quick chat GPT, learned more about it. And that was just kind of another check in favor. And then when we started to see it trend, it potentially confirmed it. But I thought that was just such a cool little tidbit that helped.
Yeah, because it really started to sell off like right at the London Open, and I think that this is just about the participants that are in the market, right? And just thinking
Yes.
about what those participants might do, because if you're talking about institutions and central banks and global money flowing in and out of gold, like we're talking about that huge macro story that we were just talking about. But if we're just talking about futures traders and hedge funds, those are the types of traders that are going to want to sell on a day like this,
Yes, they're
right?
thinking similar to us when gold makes new lows.
Exactly. They're going to want to take profits, or they're going to be shorting. So I think that was pretty interesting and pretty keen on his part.
Part of
I
me
want to
thinks, is there a model behind that? Probably not. Someone's definitely already armed that.
yeah, yeah, exactly. So I want to leave us with this, because where do we go from here, right? Because
Where do we go?
the trade's over. We're still watching gold because this narrative is still here. It's still super interesting. And this is what I saw on Twitter nonstop over the weekend after this trade was made. So, and this is Ox Nobbler, which is at Crypto Nobbler. It says gold starts dumping hard right after US markets
Oh,
open. When gold tops out, liquidity flows into Bitcoin and crypto. That's when bull runs begin. Don't get shaken out by short term manipulations.
Man,
right?
oh
And
man. So everyone
in
started buying Bitcoin again because gold had one day down.
yeah, exactly. In my favorite depressed options trader says the same thing. Like he took a screenshot of his account and all the people talking about rotating into Bitcoin. Bitcoin versus gold, and you've got basically a million uh a million people supporting Bitcoin, pumping Bitcoin, and you've got probably one person pumping gold in Peter Schiff, right?
Oh yeah, yep. It's literally actually an army of influencers versus one.
Yeah, yeah. So I just found it interesting because everyone's trying to create this narrative that Bitcoin's going to run, and so I'm kind of watching with a box of popcorn, being like, is this actually real? Is this going to happen?
Is
Is
it too good to
Bitcoin
be
going to start?
true?
Is it going to start catching a bid? And so far it hasn't. So it seemed a little bit too known, like too much. It's too much. Everyone was talking about it. I was like, how is this going to be real?
And what I thought was interesting with that point, because I was seeing some of that too, and I think you said some links. Like, it's not like the gold thesis is dead. So, like we said in the beginning with the drivers, like I don't know if that dynamic really makes sense when you have that big of the fundamental thesis behind it. I don't know.
Yeah. Who knows if it's a short-term thing or a big macro thing, or if it's just in people's heads. Like maybe it has a sample size of 2 and it's actually not real.
Yeah,
They saw this happen like once or twice, but it's interesting nonetheless because of the airtime it got. Like I mean,
yeah.
I probably saw 30 accounts talking about now comes the rally in Bitcoin. So we'll see. Maybe it still happens, but it's just something I found really interesting because it became very popular to take that stance.
The historicals are interesting. Also, the 2 day move gold made about 6% down.
Yeah.
So
Yeah, there
the
you go.
fifth instance was right on par.
Yeah. All right, well let's end it there. And you got anything else for us, Tim?
I wish I wore a gold chain.
Yeah, but you should have for this episode. That would have been perfect.
I don't have that many.
All right, thanks everybody for watching. We appreciate you, and until next time, stay safe out there.